Hey team, welcome back to the Retirement Account Breakdown. In today's video, I'm going to walk you through rolling covered calls, or how you can offset losses that you're having on covered calls. So if you don't know what this is, let me quickly explain what a covered call is. A covered call is when you sell a call that is higher than where the current stock is. So as you can see, the current stock, or let's just use SPY as an example, is roughly at $425. If I wanted to sell a covered call on this, I'd go up to maybe 430, 435, 440, something like that, sell a covered call. I would get to collect the money that it gives me. So let's say I make $100 or a $1 in credit. When I sell that, I get to keep the $1 in credit as long as the stock stays below that strike price, or the price that I selected by expiration date. So let's say I picked a 440 covered call that expires in 30 days. Then as long as the stock stays below 440 in 30 days, I get to not only keep the stock, but I also get to keep the money they gave me. And that's what a covered call is. Now again, if it goes above that, what happens is I get to keep the money they gave me, but then I also have to sell the stock at the price I selected. So I have to sell it at 440, which means I'll make the profit from here to 440 on the stock, and I'll also get to keep the money they gave me, but I no longer have my stock. So again, it's ideal that I keep my shares, but there's also a chance where you sell your shares. So right now I'm in that type of situation with a covered call I have on Apple. So let me go to Apple. You can see here that Apple just drove very hard today, which is very great for the swing trade. I picked up a swing trade near this 200-day moving average bounce. And so stock-wise, I am doing great on this position, but covered calls, I'm down a bit. So again, I started my covered calls throughout here, and I was doing really great. And I collected 50% on 2 of my covered calls because it was neutral. But now we popped up, and my covered call has a strike price of 132, which is I don't want it to get above 132. Well, we just went from 127 all the way up to 130. So as you can see here on my monitor trade tab, I sold this covered call at 127. It is now $2.04. So I am down in the negative a total of $77 on this. And so again, if it keeps heading in this direction, I have, how long do I have until expiration? July 21st. So I have about 2 weeks, three weeks until expiration. And so let's actually take a look at that. So here we go. My position expires in 25 days. So again, in 25 days, Apple going up $2 is totally possible. And so I want to see if there's a chance for me to roll this out and to save myself and also collect more credit. So let me explain what this means. So looking at the chart, my line here is 132. If it gets above 132 in the next 25 days, then I have to sell my stock. Now again, that's not a problem, right? Because I bought in this area and I sold here. But again, the potential for Apple can go much higher. The potential for Apple is around 150, 160, or preferably 162.36. And so because of that, I don't want to give up this stock room just to make some covered call gains. So what I'm going to do here is I'm looking to move out in time. So let's say maybe back to 30, 35 days, which is where I usually buy, 30, 45 days, and go up a bit to maybe 140, 145, and collect a credit that's higher than the current credit there is. So let me explain this. Okay, you can see here that if I have to buy this stock back, I have to buy it back at $2. Okay, so if I'm buying it back at $2, then I want to collect a credit that is greater than $2 so that it offsets this and makes me money. So that's basically what we're looking to do here. So let's see if I can do a sell and roll. I don't typically roll much on here. Trade view orders. Yeah, let's say create rolling order. Analyze rolling trades. Sorry, I'm not familiar with this. I'm just going to do it the way that I'm used to, which is, okay, so if this is $2.02 or $2.04 for a total, if I want to go out to 46 days and I want to go out further, let's see, I can get what is this? I can get a 136 for 233. I could even collect a small credit at 137. But again, I kind of want to make a lot of credit on this. So again, I can have 134. I can do a 135. And anything like this will give me a chance to collect more money. So for instance, if I sold this covered call instead, if I rolled out to this one, so if I bought this one back at $2.04 and I sold this one at $2.40, then I get to keep the difference. So 240 minus 204, let's see if I can do math, 36. I get to keep $36 in credit. And so again, that's one way to go up and out. What I'm looking for is I'm going to be looking at what's happening. So basically, you can see here that the market took a huge uprun, and so again, the market is closed, so I can't place this order right now. But what I'm basically going to do is on market open tomorrow, I'm going to see, all right, are we going to continue strong up? And if we're continuing strong up, then what I'm going to do is I'm going to roll out, hopefully to the highest strike price that I can and still collect a credit. But if I can't, well, what I mean, so if that's my scenario, if the stock continues to go higher, I'm going to try to roll up and out. Which is what that's called. But if it's because we jumped up so high today that we see a bit of a sell-off, I'm going to come back near break even, and I can even roll up and collect more credit, or I can sell for a profit. So basically, we're looking to see how tomorrow behaves in the morning, and based on that action, I'll be able to place my trades. And I'll be doing that I'll be doing that on my morning live stream that I do every single morning for my software users. So again, if you want to get access to that for free, then definitely click the first link below. All right, guys, thank you so much for watching. This is how you roll out covered calls. Those different scenarios when you have the chance of losing money on a covered call. You can go roll up and out. You can let it expire, and you collect the stock gain, and you get you get to keep the credit. Or you can just buy back the covered call, take a small loss, and let the stock continue to run. So those are your three options. All right, guys, thank you so much for watching. I hope this helped, and as always, subscribe so that you can get our weekly videos.